We are seeing a little bit of, let's call it inflation-induced anxiety around commodities today. So oil's up. You see the big move up we've had in oil. Oil stocks are at new highs right now. Financials are doing very well at the moment. We've got 7-year highs in oil, near 13-year highs in natural gas. So a little concerned about that, but it's certainly helping a small sector of the markets like energy. Consumer staples up. Tech is holding up pretty well considering the rise in interest rates that we've had. Earnings coming up. I'll have more to say of that in the next couple of days here. But take a look at some of the sectors at new highs. Banks doing well, sitting near 52-week highs. We've seen Fifth Third. These are new highs, folks, multi-year new highs. Fifth Third, that's right near the highest level since 2007. We're talking about before what happened with the great financial crisis here. So some of these banks are really having big moves up. Even some of the financials, other financials like Prudential, doing really well at 52-week highs. You know about energy. Conoco got the downgrade over at Goldman on valuation. That's not stopping anybody. We've got new highs all over the place. Apache, Hess, Occidental, Devon, One Oak, the big natural gas company's been hitting it out of the park in the last few weeks. So this is a small 3% sector that's finally making a bit of a comeback. But remember, it's still only 3% of the S&P 500. There is earnings starting Wednesday, and my heavens, is there a lot of pessimism around earnings season starting. Obviously, we've got a lot of supply chain issues. This is being offset by the fact that demand is really strong, but supply is problematic. So the poster child for all of this is Nike. Everybody is saying, uh-oh, is Nike going to be sort of what everybody's going to be the model for? Nike said demand, really great. Supply, really a problem. 40% from Vietnam, we're having problems there. They've had shutdowns around COVID. Indonesia, the same situation. The hope is that'll get up running fairly soon, but it's not happening. It doesn't look like it's happening. But as you can see, they're very reluctant to punish Nike because demand is so strong. So this is the problem. How do you model this? How do you figure this out? We've never seen anything like this. It's very difficult to get the supply chain issue right to correspond with the demand side of the equation. I think that's the big problem that the markets are having right now. So remember, normally this is sort of a mid-cycle thing. We get earnings sort of peaking out, PE ratios sort of start coming down, and they have started coming down. And earnings start flattening out. And that's what we're seeing here today. Now, look, we're going into the third quarter earnings. Here's something that's a little weird. We're in the middle of a global recovery. Third quarter earnings are actually the estimates, the dollar estimates, they're lower than the second quarter. That's a little strange, folks, when we're in the middle of a global economic recovery. The analysts are again being very, very conservative. And the hope here, the bull hope, is they're going to be wrong again. And the one thing that's got everybody holding back is the supply chain. We don't know how to model it. We can't figure out, is Nike going to be the model here, or are we not going to have this? Are they going to be a bit of an anomaly? That's the problem that we've been having. Now, the big issue, of course, is if you take a look at where the stock market is, it's been holding up very well. We're only 3.5% off of a new 52-week high for the S&P 500. And if you look at the major sectors, we got oil at a new high, got energy at a new high, we got financials at new highs right now, multi-year highs, as I mentioned, in some of the case of some of these super regional banks like Fifth Third, PNC, U.S. Bank Corp, multi-year highs in those cases. Consumer discretionary is only 2% off, industrial. So you see a lot of this is value sectors like energy, financial, and industrials. And technology and parts of the consumer discretionary that are growth, all right, they're down. But, you know, you're talking 4.5% off a new high on technology. So bottom line here is the market is still giving everyone the benefit of a doubt. The COVID, the whole issue with the supply chain is the big wild card that nobody can quite model. And we're going to see, David, very choppy October until we get through, I don't know, 2/3 of the earnings reports and we've sort of figured things out. So just expect a little more volatility. Highly recommend that James Bond movie, David.
Shepard Smith here. Thanks for watching CNBC on YouTube.